Hello friends, welcome to Letstute Accountancy. So today we are starting with a new topic which is fundamentals of partnership. Now firstly, what is partnership? So suppose there are three persons, Mr. A who is an accounts professor, Mr. B is a maths professor and Mr. C is an economics professor. Now together they are thinking of starting a coaching class for which Mr. A contributed 2 lakhs, Mr. B and C contributed 1 lakh each. Initial contribution that is brought to start a business is known as capital. Now they three together form ABC coaching classes where they decided to share the profits equally amongst them. In this case, A, B and C will be known as partners and they collectively be known as partnership firm. So ABC coaching classes is a partnership firm. Now, let's see the definition of the partnership firm. So, as per Indian Partnership Act 1932, the partnership is defined as the relationship between persons who have agreed to share profits of a business carried on by all or any of them acting for all. So, now let's understand each word of this definition in detail and the features of the partnership. Now, first of all, it is a relationship between persons. That is, there have to be at least two persons to start with a partnership firm. To start any partnership firm, it requires minimum 2 persons. So, 2 or more persons can come together and start a partnership firm. Now, in case of partnership firm, there can be maximum 50% but not more than that. So, there can be 2 partners or 5 partners or even 20 partners but not more than 50. Thus, it is a relationship between persons who have agreed. Now, agreed over here means there has to be an agreement between the partners. Taking the same example, ABC started with the coaching classes and they agreed to share profits equally. They agreed that A will introduce 2 lakhs of the capital and B and C will bring capital of 1 lakh each. So, there is an agreement between them. Now, here the agreement can be oral agreement or it can be a written agreement. But why do we require an agreement? That is because it directs how the profits would be distributed between the partners, whether any partner will get an extra salary or commission over and above the profit share, or there can be any other terms and conditions. So it is required to have an agreement beforehand. There has to be a mutual understanding between the partners. Friends, it is always advisable to have a written agreement. Say suppose there are two friends who started with a partnership business, but at a future date there happened to be a dispute between them regarding the profit sharing ratio. Now if there is a written agreement, then they can refer to it and decision can be taken. But what if there is no written agreement and terms were decided orally? Then there can be a problem. So it is always advisable to have a written agreement which is known as partnership deed. So now what is partnership deed? The partnership deed is a legal document that would be signed by all the partners which will contain all the terms and conditions of the partnership firm. Thus, how the profits would be shared, whether any partner will get extra salary or commission or there can be interest on capital payable to the partners, these all would be decided and it would be returned in the partnership deed. And this deed has to be signed by all the partners. Even if say from 3 partners any one has not signed the deed, it is not allowed. It is not a valid agreement in that case. So this was about the agreement and partnership deed. Now going further, it is a relationship between persons who have agreed to share profit. See, generally the main motive to start any business is to earn profit unless it is not for profit organization. Now after the firm has earned the profit, it needs to be shared between the partners. So how the profits would be shared between the partners? It would be mutually decided between the partners in which ratio the profits will be shared. Whether like our previous example, it would be shared equally between the partners, or suppose there are 3 partners, then it can be shared in the ratio 2:1:1 or 5:3:2. This would be mutually agreed upon between the partners. Again, if there is an oral agreement, then it would have been decided orally. If there is a written agreement, that it would be mentioned in the deed how the profits would be shared. Also, do note that the profits are shared between all the partners, but if there are losses in the firm, then it is not necessary that all partners have to bear the loss. So now let's move further. Share profits of a business. Here when we talk about business, it definitely has to be a lawful business. Partnership firm cannot do any illegal activity or any business which is banned by the government in that country. And now the last part of the definition, which is very important, carried on by all or any of them, acting for all. Now what does this mean? Again we will take the same example of ABC coaching class and 3 partners. These 3 partners together started the business, all of them professors and they all are teaching in the classes as well. But suppose the business is majorly managed by partners A and B Mr. C is teaching there, but he is not actively involved in day-to-day business operation. That is, he is not actively engaged in routine business management. So there might be possibility that there are many partners in the firm, out of which some are active partners and some might be sleeping partners, not taking part in the day-to-day activities of the business. Now in that case, the partners of the partnership firm have a principal-agent relationship. Now what is that? So if we talk about agent, then as an agent of the firm, the partner represents other partners and thereby binds them through his act. So suppose A, B and C are the partners, and if A takes any decision for the firm, then it binds the other partners as well. This means Mr. A is acting as an agent of the firm, the ABC coaching classes. Now if we talk about principal, he is bound by the act of the other partners. So suppose if I appoint an agent and whatever transaction he enters into on my behalf, it will be binding for me. Same for the partners. If out of partners A, B and C, A and B are the active partners and take any decision, then it will be binding for partner C as well. So this was all about the features and characteristics of the partnership, which we can understand from its definition only. So now let's quickly revise this. It's a relationship between person. There have to be minimum 2 persons to start a partnership firm who have agreed. There has to be an agreement, either it can be oral or written. Written agreement is known as partnership deed. To share profits of the business, the partners decide the profit sharing ratio and the business has to be a lawful business and it is carried on by all or any of them acting for all, meaning the relationship between partners is a principal-agent relationship. I hope you all have clearly understood this much. Now what if there is no partnership deed or there is no agreement? See, if there is a partnership deed, then it is to be referred in case if there are any disputes or for anything. If the partnership deed is absent, in that case, the provisions of Indian Partnership Act 1932 are to be followed. So there are some provisions related to accounting which I have taken over here, which are to be followed by all the partnership firms if the partnership deed is absent. Now first is sharing of profit and loss. In case there is no deed, then the profits and loss will be shared between the partners equally. Next, interest on capital. Firstly, what is an interest on capital? Taking the same example, A, B and C, 3 partners together started with a partnership business, ABC coaching classes. Now when they started with the business, A contributed 2 lakhs into the business, B contributed 1 lakh and C also contributed 1 lakh into the business. This money contributed by the partners is known as capital, right? Now if firm pays the interest to the partners on this capital received from them, that would be known as interest on capital. This interest on capital is an expense for the firm. So what happens that firm received capital from the partners and on which firm pays interest to the partners. And this interest which is paid by the firm is an expense. So if partnership deed is absent, then interest on capital is not allowed to the partners. Okay, so do remember, if there is no deed, then interest on capital is not allowed. See, taking the same example, A, B and C, where A had contributed 2 lakhs into the business and B and C had contributed only 1 lakh. In this case, A can ask for the interest on the amount which he has contributed more than B and C, or he might say that let the interest to be paid to all the partners. But since A has contributed more capital to the business, he should get more interest. Now, if there is an agreement, there is a deed and there is mentioned that interest on capital would be paid at say 5% or 6%, then interest would be paid. But if there is no deed, there is no agreement, then provision of Indian Partnership Act says that no interest on capital is allowed. So, friends, do remember, even if the capital amount of the partners are different, interest on capital, if there is no deed, there is no provision, then provision of Indian Partnership Act would apply and interest on capital would not be allowed. Now going further, next is interest on drawings. Now what is exactly interest on drawing? Say for personal expenses, ABC withdraws money from ABC coaching class. Now that money or maybe goods withdrawn by ABC, that like partners from the firm, is known as drawings. So similar to interest on capital, in this case, firm may charge interest to the partners for these drawings. So whatever goods or money withdrawn by the partners for their personal use, on which partners have to pay interest to the firm. In this case, the interest on drawings is an income for the firm. Now, again, if the deed is absent, then interest on drawings is not allowed to the partners. Okay. So again, if anything is mentioned in the deed, the same has to be followed. If any rates are given in deed, the same would be charged by the firm on the partners. But if deed is absent, then interest on drawings is not allowed. Now moving further, next point is about salary and commission to partner. Suppose again the same example where we saw that A and B are actively involved into day-to-day business operations and C is not an active partner. Now in this case, A and B can ask for the extra salary over and above the profit share because they both are managing the business and C is not involved in day-to-day operations of the business. Also, it can also happen that A is involved in getting the new admissions of the students. He is more involved in marketing activities. So, A might can ask for the commission on the number of students and the fees received from them. But again, if it is mentioned in the deed that the salary or commission would be allowed to so and so partner at this much rate, then it would be allowed. But if nothing is mentioned in the deed, then salary and commission to partners are not allowed. Okay. So do remember that interest on capital, interest on drawings and salary or commission to partner are not allowed if there are no provisions in the partnership deed. So the provision of Indian Partnership Act does not allow interest on capital, interest on drawings and salary or commission to the partner. Now next point, interest on partners loan. Now what is this partners loan? It is an extra amount which might be given by the partner to the firm over and above the capital contribution. This can be for the expansion, for the growth of the business. It could be for buying a new fixer set. So, say suppose Mr. B gave a loan of 50,000 to the partnership firm. Now, in this case, we can ask for the interest for this loan amount given to the firm. Again, if the rate of interest is mentioned in the deed, at that rate, the interest would be given to the partner on the loan which is given by the partner to the firm. But if again the deed is absent, then provision of Indian Partnership Act says that the interest would be allowed at 6% per annum. Now, if the loan is for 6 months or if it is for the 9 months, then proportionate amount of interest would be allowed. But yes, as per Partnership Act, if nothing is mentioned, then partners should get interest at the rate of 6% per annum on the partner's loan. See friends, it is different from capital contribution. So capital is different on which interest on capital is not allowed as per the act. But over and above the capital, if partner is giving a loan, it is specifically a loan to the firm, then interest will be allowed at the rate of 6% per annum. Okay. And now the last point, which is admission of a new partner. So suppose there were 3 partners A, B, C and they decide to admit a new partner, Mr. D, into the business. Now for admitting this new partner, Mr. D, B and C gave their consent that okay, D should be admitted as a partner. But A has not given the consent yet to admit a new partner into the business. In this case, until and unless the consent of all the partners are received, new partner cannot be admitted into the business. So again, for the admission of the new partner, consent of all the partners are required. Okay. So it cannot be like out of say there are 5 partners and they want to admit one more partner, say 6th partner into the business, and only 4 give the consent and 1 does not. So it does not go with the majority. There has to be consent of all the partners to admit a new partner into the business. So this was all about the provisions of Indian Partnership Act. So if the partnership deed is absent, profit and losses would be shared equally among the partner. No interest on capital, no interest on drawings, no salary or commission to the partners, interest on partner's loan and at the rate of 6% per annum. And for admitting new partner into the business, consent of all the partners are required. See friends, when you are solving the sums in exam, in that case, if any provisions or if any conditions or instructions are given in the sums regarding interest on capital or interest on drawings or any other thing, then you need to follow the instructions which are given in the sum. We assume that is mentioned in the deed. But if there are no provisions given, if the sum is silent, if there is nothing mentioned about interest on capital or maybe salary to the partner, then you have to follow the provisions of partnership deed and accordingly you need to write your answer or give your opinion on the same. Okay. And the last point, registration of the firm under Indian Partnership Act 1932 is optional and not compulsory. But it is always desirable and advisable that you get your partnership firm registered under the act. So in case if there are any disputes, then the firm is registered, and again you can take the legal action. So better is to get the firm registered under the act, but it is not compulsory. So if you get some any question regarding this, the answer would be registration is not compulsory, it is optional, but it is desirable and advisable. So this was all about our first session, where we saw the meaning of partnership, what is partnership, we saw the definition of partnership, based on which we saw the features and characteristics of partnership, and also the provisions of Indian Partnership Act. Now, before we end the session, there is a question for you to check your understanding of whatever we covered in this session. So, whatever videos will be coming up on this topic, at the end there would be always one question, and you can write your answers in the comment box. Okay. So, the question is, Rohit, Meet and Neha are the partners in a firm. They have not entered into a partnership deed. Now, capital contribution of Rohit is 2 lakhs, Meet is 5 lakhs, and Neha is rupees 4 lakhs. The profit of the firm is rupees 75,000. Meet demands that the profit to be shared in capital ratio. Now, over here, the capital of Rohit, Meet and Neha is 2 lakhs, 5 lakhs, and 4 lakhs. And the ratio becomes 2:5:4. And Meet is demanding that the profit to be shared in this ratio. So now you need to find out the share of profits of all partners. So now you need to decide whether the demand which is raised by Meet for sharing the profits in the capital ratio is proper or it is incorrect. And you also need to find out the profit share of each partner. And if you have any doubts, you can ask the same in the comments. Stay tuned, because we'll be coming up with more videos and more sessions on class 12 accounting. So guys, see you all in the next session. Thank you.